Hello, everyone. Welcome to the market update for Tuesday, June the 7th. I'm feeling a lot better this week, although my voice is still a little rough. So I'll have to try to keep the update within an hour so I don't put too much stress on my vocal cords, at least right now. But let's go ahead and get started. Again, if you have any questions that I don't get to during the live class, or that you think about during the week, please send those to jerry@traderspro.com. I might be a little bit behind on a couple of emails from last week. As many of you know, I was kind of down sick last week, and so I'm a little bit behind. So if you have an email you sent me and I haven't answered yet, I'll probably get caught up by today, so you'll get that answer. All right, let's get started. Now, obviously, really not much has happened in the last week. The market's just been in this sideways range. But it is telling us where it's at least telling us where it's acting like it wants to go, which is it's acting like it wants to go higher. We'll talk about that when we look at the charts. As far as the direction alerts, not much has changed from the last few updates. We're at the far left side of the bear market here. We are in the middle as far as the indicators. Momentum's right in the middle, meaning that we're not extremely overbought or extremely oversold. That tells you that we could go either way right here. And so we're going to rely a little bit more on what the chart behavior is telling us to give us a little better idea of where we expect the market to go, at least in the near term. Same with Brett. Brett's been just kind of sitting right in the middle there. Sentiment is still relatively high. The buy-sell ratios have crossed. You see now the buys starting, a lot of buys, stocks going from hold to buy. So you're starting to see that take off. A lot fewer stocks coming in from sell to hold, there are fewer stocks going from hold to sell. So that's why this is kind of stalled out down here, and you're starting to see this widen out a little bit. But again, not an extreme range, so it could continue to move. And this is telling us with the crossover, that's telling us the market is looking a little bit more bullish. With there are more stocks going to new buys than new sells, and we're not in an extreme range there, so it's telling us that could continue. Now, again, we're going to base that expectation on the charts. We look at the charts, but that's telling us there's still some room for the market to run. If it does want to run and move higher here, it can definitely have some room to do that. This sentiment indicator is right in the middle, no extreme range there. So let's get right to the charts and start analyzing what charts are telling us. Take a look at the S&P chart first. There's a question here. When would you trade low price stocks? For example, ISSC was priced around 880 last week. I don't know. I don't know if there's the simple answer would be when market conditions are looking more bullish. I mean, you're not going to want to buy a lot of stocks in period unless the market conditions are looking a little bit more bullish. I'd have to look at the individual chart pattern on that. So that maybe that's something I can answer through an email. But the low price, I don't really. The only thing I take into consideration on price is if it is below $10, I do want to just make sure there's some liquidity there and make sure that it's not a stock that's deteriorating, meaning it's come down from a $50 stock and now it's an $8 stock. I don't really want to mess around with those because usually it means that there's something broken in that company's at the company's core, and it probably won't recover from that for a while, and it could be low price for years. I'd much rather buy a $50 stock that's trending up strongly and could go to 200 easily than one that's stuck at $10 that could be, maybe it goes to 15 in 5 years, but it's going to be in this low range forever or for a long while. I tend to want to focus on stocks that are moving. So that would be something I would look at as far as that's concerned. But again, I don't know that I would, if there's a, you know, a specific time period or whatever that I would consider low price stocks. It's just there's a lot of other factors there that I'd have to look at. But most importantly, be the market conditions. You don't want to be buying anything without the market conditions looking a little bit more bullish. All right, let's take a look at S&P chart here. And really, it's what I was talking about Thursday. It's just we've stayed sideways. I said the market was moving a little bit more sideways right here. Thursday, we had looked like we were starting to break out right there. Now Friday, it came right back down, but it still stayed in the sideways range. And what I said on Thursday and what I'll say today is whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. That's the direction it's more likely to move in after it's done moving sideways. Again, the key words there are more likely. Doesn't mean it has to, but there's a high probability, a very high probability that it will continue to move in the direction it was moving in before it moved sideways. And the other key word is when it's done moving sideways, and that's what we saw from Thursday. Is it wasn't done moving sideways yet. We don't know if it's done moving sideways right now. We just know it's rallying off the lower part of the sideways range. Could it stay in this range for another week? Yeah. Now remember what the sideways range, what sideways movement is telling you is it's telling you indecision. It's telling you that buyers aren't confident enough to buy right here. It's telling you sellers aren't confident enough to sell aggressively. There's some buying and selling going on, but aggressively. So when does that happen? That happens when the outlook is not real clear, or they're not real confident in the outlook. Now we do have a CPI report coming out Friday. That's going to be an inflation report. Everything is focused on inflation right now, and you know, it's amazing that and this is another thing to keep to be aware of. You've got to focus on what the market is focusing on. 2 years ago, when a CPI report were to come out, did not matter. It didn't matter what that reading was. The market was not going to have an overreaction to the CPI report. Even if it showed a little bit of inflation coming in, the markets just were not focused on inflation, not worried about inflation. That was 2 years ago. Today, it's different. Everything is focused on inflation right now, and anything associated with inflation is going to be a big deal. And obviously, that's coming up Friday. So does it make sense that the market is just kind of not making a true direction right here ahead of that report? No, it's not surprising, and maybe that's what happens this week. Is we still remain in this range until Friday. So just be aware of that. If you know, you're jumping into a bunch of trades today with the kind of the little bit of the bullish reversal, we gapped down at the open and now we're positive. Be aware that we could still probably stagnate, because I thought Thursday we were breaking out of this range and we're taking off. We closed near the highs of the day. We closed kind of above, just slightly above that key price area. And by the way, look at that. We're right at the lower part of that area today where we opened, and we bounced off of it. But it looked like it was breaking out last week, and it didn't. Could look like we're going to break out right now, and it may not. And we could stall out again up here until that report comes out. Now, the way the market is acting, it's acting as though the report is going to be okay, and we're going to break out higher from that. And this is where the real subtle clues can come in as to what the professionals are leaning towards. Because obviously you're going to have your conviction, and then when there's indecision, you're still going to be leaning one way or another. And a lot of times that starts to show up in the price action, and that's what we're analyzing right here. And that's why, again, that the chart behavior and these chart characteristics are so important. The probable move out of this type of consolidation would be to go to break out to the upside. Now, it could be quick. Maybe there's an initial reaction where the market gaps up on Friday or something off of whatever that news is, and then has a bearish reversal day. It starts to close lower than where it opened. You know, it ends up with a down, close lower than the open, gaps up, closes lower than the open. It has that bearish reversal. It did break out of that sideways range, but now that looks like that's it. And it's going to start coming right back down, and maybe you have a bigger move down off of that. So that would be something I would look for early on Friday. Even if we do break out of this range before then, that'd be something I'd look for, is do we see a gap up and then a bearish reversal that would indicate that maybe there was a false initial move that took place. And that happens all the time. With some of these big events that people focus on, is there can be an initial false move that takes place. But again, the higher probability is that we will move higher. And again, this also makes sense when you understand human nature. When there's indecision, the direction you are moving in before that indecision is the strength of that's the strength going into that indecisive period. If people were buying ahead of indecision, they're going to lean more towards buying again after that indecision is done. It takes a lot more force. It takes a lot more negative news to reverse into a downtrend from that behavior. So, in other words, the path of least resistance is going to be to the upside in that context. Earlier, we saw the opposite. We had this big drop that happened right through here, and then we moved sideways. Well, the drop was where people were leaning. They were leaning towards selling in that environment. And this consolidation, once it ended, was likely to lead to another move down, which it did. Another move down out of that sideways correction. Now, again, I got to emphasize, it doesn't always work this way. It is entirely possible that the market just drops right here. But you don't see this very often, where it's rallying up, it moves sideways, and it comes right back down, where you get this rounded top right here. Usually it's pointy when these tops tend to take place. And I mean, just look at it. You get these pointy tops. This was even a double move there, but still gave you two pointy tops. There's a little bit of a pointy top. Now back here, we can you can see a little bit here. It's kind of covered a little. Let's go to 1-year chart. Let's see that a little bit better. Right here was a situation where it was looking a little bit more sideways, and then it ended up coming down. So again, it can happen, and that's why we don't want to get locked into it as if it can't. But you'll find that most of the time, a very high percentage of the time, when you see that sideways move, it at least has one more move. Now, a lot of times what will happen, you'll get that one more move up, just barely, and then it'll drop, and I'll still give you a little bit of that pointy top type of correction. And, you know, if you looked at this a little bit closer, maybe you did get that a little bit where it barely broke out. I would still consider that more of just a sideways move that ended up not going higher. And so again, if you're looking for absolutes, we're just not going to get absolutes. And I can't give you an absolute here that we're going to go higher, but we operate in terms of probabilities. And so if I'm making a trade decision right here, I'm going to be leaning more towards buying in this area here, expecting the market should go higher. If I'm already in positions, in bullish positions, I could choose not to add to them, but just to hold what I have, not get any more aggressive than I already am. And that's probably where I am right now. I don't really want to add more to where I am in the portfolio just yet. But if we can break out of this area and look a little bit more bullish, I've talked about this in a few updates previous, we can kind of get clear this big range in here. And I would tend to try to add more to the portfolio at that time. Another thing is you could wait till after Friday. After that news comes out, now the market will trade what it already knows, and you might be a little bit late. Maybe it jumps on a big move on Friday on positive news, and you miss that initial move. But it would be a safer entry if you don't want to get caught up and feel like you're guessing on an outcome. It could go like a coin flip. It could go either way. And I'm not looking at this CPI number as you would an earning announcement. Earning announcements can be really erratic. There's just too many facets to an earning announcement. You have the top line number, the bottom line. Maybe you beat on the bottom line number, but miss on the top line number. Who knows how the traders are going to react to that? I've seen them react positively and negatively to that type of outcome. You could see beats on both the top and bottom line, and the stock could go down. Excuse me. You could see beats on the top and bottom line, but the forecast during the conference call is not rosy, and that could cause stock to go down. Or you can see the miss on their earnings numbers, but their forecast is strong. So there's so many variables that go into that earnings report that it really does begin to feel like a coin flip. This is really going to be, is that number too hot or okay? Is it looking like inflation is peaking, or it hasn't peaked yet? It's going to be pretty straightforward. And like I said, there's a lot of people that have these big professionals they pay millions of dollars to get information that you and I don't have. Now, I'm not going to start getting into conspiracy theories that they already know what that report is going to read, but they've got similar things that they do have access to look at to know pretty close to what that number is going to be, if it's going to be likely bad or what have you, and they're going to get a head start on it. And I think with the price action right now, we're seeing that that head start is going to lean a little bit more towards the bullish side. And again, we'll have to wait till we get closer to Friday. Maybe Thursday's update will be a little bit more clear as far as that goes, of what's going on here. But again, this is just basic trend analysis. You have impulsive up off the bottom right here. This is corrective. We should have another impulsive move up at some point, even if it's a real short move. The other indexes look about the same. Dow, very similar pattern there. NASDAQ 100, same type of behavior there. And again, the NASDAQ remember last Thursday we said NASDAQ still had a little bit of room to run to get into that resistance area, and we're very close to that. Maybe that's what we see in the next couple of days, is the NASDAQ outperforming the other indexes, but then stalling out up here ahead of that inflation report. We'll see. Russell 2000, kind of the same thing. All right, so all the index charts, basically showing the same thing, and I've kind of pointed out the key areas there. We'll see how things, and it could be that we've broken out by Thursday, and then you have to wonder if maybe you'll get a bearish reversal candle on Friday, some sort of bearish reversal, that maybe the market is now viewing that as being negative. We'll see what happens ahead of time, ahead of the report there. We'll know on Thursday. Bonds continue to move lower. Again, we were talking about this as looking more like a correction within the downtrend. It seems to be that case with this drop. Have a little bit of a rally today. Now, it would be interesting, and this is something to keep an eye on this week, is if it's at some point in time, bonds are going to go into a basing process and be done dropping. If we do rally back up to this area from where we're at, that would give us a higher low in our trend analysis, and we'd have to start to wonder if maybe you've had this big fall right here, and then maybe we're starting to base a little bit before maybe starting to trend up. Who knows? But we'll keep an eye on that. Obviously, if it dips below this low, it's just continuing the downtrend at that point. So we'll see if by Thursday we see any clearer direction there. But I just want to point that out, that with today being up and with this low yesterday being higher than the previous low, we'll have to keep an eye on that. And you can kind of see this a little bit better in a longer term chart, because having seen as far as bonds have dropped, you got to be thinking we're getting close to a process of starting to flatten out here a little bit. So let me kind of show you back here. Again, you had this drop right here. You can see it started to move up, and it came back down, and then it created that higher low right there. And then you look to see if it breaks out to a higher high. That's kind of similar to what we're watching for right here. So if it holds as a higher low right here, you'd want to see if it breaks above this area at a higher high, and you'd like to see how it does it. Does it do it in more of an impulsive manner where it's really starting to take off? Or is it, if it's still kind of chopping back and forth, I would assume this is all part of a correction for another move down at that point. But trend is still down. I don't see any clear indication of a trend reversal yet, or possible trend reversal yet. And so that would be my outlook, is still that bonds are trending down, and we're going to assume they're going to continue to trend down until we see different. Gold, we talked about this being a potential bullish ABC pattern, had an initial move up and then right back down again. You could call this a little bit of a sideways consolidation after this little move. Is it likely to continue to move up out of that? I'd say the way it's behaving right here would be more bullish, that it looks like it is moving sideways after this little upward move right here. Whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. That's where it's more likely to go after it starts moving sideways. But as I've told you many times, gold can be pretty erratic. I don't really trade gold very often, and these last few months have only confirmed the wisdom in that for me personally. All right, oil continues to move higher. We've had a few of these little bearish days here and there. We broke out right here, this little bearish reversal day. It shook that off. Broke out again higher on Friday. We kind of consolidated a little bit these last couple of days. It's just still acting like it wants to go higher. I think the oil is the trade right now. If you want a consistent trade that at the least is holding up with some of the whipsawing going on, and at best is still going higher. This is kind of the area. This is where I'm overweight in my portfolio, and I plan to keep it that way for now until it changes, until I see any reason to assume that could reverse. I don't see that yet. The dollar, talked about the dollar being in a little bit of a correction phase after this drop. This looks impulsive. This looks corrective. Made a little bit of a move higher, but there's a bearish reversal candle today. We'll see if that leads to another move down in the dollar. I would assume the way it's acting right now, I'd assume the dollar is acting like it wants to go lower. Could it be that this is kind of one of those bowl-shaped moves where it starts to trend up again? Possibly, but I don't see that yet. And so I'm going to assume that this is it didn't really drop a ton right there to really have a strong bowl-shaped recovery. But, we're not going to ignore that possibility. As of right now, though, I'm looking at this as a correction or another move down. We'll see if that continues in that direction, which would be more bullish for commodities like oil and gold if that were to take place. There tends to be that inverse relationship between the two. VIX has come down, and it's kind of bounced back and forth through here as the market's kind of bounced back and forth. Today it's kind of making a move lower. I'd assume that it's going to keep going lower if the market rallies. Really, it's not telling us anything significant here, and I've told you that a number of times that if you're expecting the VIX to tell you something every day, it's not, and so you're probably overanalyzing it. But I just don't see anything, really significant today, other than the market S&P is up and the VIX is down, which is what you would expect to be the normal relationship there. But definitely something to keep an eye on. That if we do start seeing the market sell off, and we did see it sell off a little bit, we didn't see the VIX spike up very much. So it saw it move up modestly on some of these moves, but there was just nothing in those drops that was indicating panic or anything. So chip stocks are looking more bullish. They're looking a lot like the index charts, where you got impulsive move up. This looks corrective. You broke into a higher high right here. You got a higher low right here. Acting a little bit more like an uptrend. If there are some individual chip stocks that you're looking to get into, the ETF right here is suggesting that those stocks are looking like they could move up as a group. And so, looking to take a look at NVIDIA or AMD or some of the leaders in that group. If you're looking for a reason to get back in, at least in the near term, they're showing that they could go up a little bit in the near term. I don't know. I'd be looking at them for investments yet, because I don't think the market has bottomed. But if you're looking for a shorter term trade in some of those, you might have one here over the next few days. Dow transportation stocks looking the same way, consolidating sideways. Previous move was up, impulsive up, acting like they want to go higher, at least in the near term. Bitcoin, I haven't decided yet if this is a consolidation for a move lower. It's already down by a ton, so you have to wonder if this is maybe starting to form a basing pattern for maybe an uptrend again. If we look at a longer term chart, you can see what I'm talking about. You have this big decline already. Let's go to a 2-year chart. So you have this historic decline already. Could this be that we're starting to base a little bit and then start, form that bowl-shaped move where you start moving back up? We're still too early to be able to come to any conclusion there. I would say that if it breaks below this, obviously it's not that bowl-shaped move. It's actually still trending down. I really don't want to touch it as far as a trade right here, because I'd want to see a little bit more evidence that it's moving up. Remember, the sideways movement is indecision, and I just don't see buyers real excited yet to jump in. Usually you don't see this indecision last very long with Bitcoin. You don't see it moving sideways for very long. This is an unusually long period of time. So that indecision is significant, and I want to let the market determine whether they've analyzed everything. All the people that cover crypto, if they've analyzed everything and now they want to buy right here, they'll start showing up on the chart. I'm going to let them figure that out. I'm not really anxious in trying to pick a bottom. Now, if you're different, you're trying to pick a bottom. Well, how could you try to do that then? Well, you could get in right now and just put a stop below the sideways area. That you controlled your risk, you defined your risk. You're assuming if it is bottom, the potential reward is going to be much greater than that risk. And if that's your plan, I have no problem with that. But then you've got to stick to it. If it drops below here, you got to stop out. You can't be making up excuses of why it's still at a bottom. And I know I'm still close to a bottom, so I'm going to stay in. Well, now you're not trading very smart. You're trading like a losing trader, and you'll probably end up getting wiped out. So, I'm not saying you can't trade it here, but you got to be able to trust yourself and have a plan and make sure you can trust yourself to stick to that plan. But I'd rather wait till it starts moving again, because then I know it can move very quickly, and I'm not waiting 2 months while it still moves sideways again, waiting for it to do something. All right. That's it for the market update. As far as individual, well, let's take a look at the portfolio. I did have my hedges on, but I got out of them today on SARC and SOXS. Back in here, they had a little bit of a bullish reversal candle yesterday. It looked like we could start moving up. The market was still at a spot where, well, the market was actually at a spot yesterday. Let me go back to the S&P, because I did do a couple put option trades yesterday. Because the price behavior yesterday was bearish. The way it gapped up at the open, couldn't hold it, closed lower than where it opened. What looked like to me is that maybe this is kind of wave A, wave B, and we're going to get a wave C down. There was a pretty high probability we're going to open lower today, but then the question was, what do we do after that? Do we sell off a little bit more? Do we gap down and then reverse? And so I did have those hedges on overnight to see what I felt. If it dropped and had a deeper sell-off, I still felt like even if it had a deeper sell-off, it wasn't going to last very long and it'd still move up, and this was still a correction within the uptrend. But I wanted to have that hedge on, and then I was going to make that decision in the morning when it opened. And when it opened, it gapped down. The market held that gap down, started to rally off of that. You can see it right here. Here's where it opened. And then it didn't go lower. It started to move up from there. So I went in and exited those positions, because now that's looking more bullish here. I told you that the chip stocks were looking more bullish. So SOXS is the inverse of that, meaning this is looking like it can now go down. And so with that gap up, I made a little bit of money. It's like a couple $100 by the time I got out on the gap up right there. But now it looks like this could go lower here. So I don't want to. I told you with these trades, all I'm doing is hedging with them, and I'll be jumping in and out with them. And you don't have to do that. But hopefully, as we've used these the last few months, that you've seen in down markets, you've seen the value of being able to use those to still, kind of have a long portfolio where you're not shorting stocks, but still be able to make money or at least offset losses when the market drops. So I did that on that one, and then also on SARC. Now this one, I ended up getting out at a small loss from where I got in yesterday. By the time I exited the trade, it was down below that, but it was like a $50 loss or something like that, $100 loss. Now but I'm more made up of it with some of the other positions in there. If you can see, Northrop Grumman starting to really break out. Again, it's been in the sideways range. That's significant, and it's starting to break out right there. I can switch this over to signals here. Now I have to look at this, because what I may do is adjust my stop. I think my stop was down here. I might adjust it down to this low right here. In fact, I think I'm going to do that. It looks like about 450. So now that you've broken out, it shouldn't go down below that low. If it comes down below that, that's significant. That would be, I'd probably want to be out of the trade at that point if it were to do that. USO, we already saw that chart breaking out. No reason to get out of this. It is starting to move into the extreme reversal risk range, though. I don't get too concerned until we start getting to the far right side of that. And even then, it can stay there for a little while. So we'll keep an eye on that. CEIX, nice little breakout move today. Still trending up. Is getting in the extreme reversal risk range, though. This is our coal stock. CF, the agricultural stocks have not been doing very well. This is getting close to our stop loss down here. So I'm sticking to that original stop loss. We'll see if it holds in this area here. There's plenty of support, so if it doesn't hold right here and it breaks this, it's probably want to be out of it. CVX, again, oil stock is still trading higher. No reason to do anything on that one. ADM, another agricultural stock. Now this one isn't down much, and we're still a little ways away from the stop down here. But I'd like to see it start. It is up today, so I'd like to see it start having some moves up. That CF is the only one that's really concerning me right now. So on NOC, let's go in there and adjust the stop. We originally had it at 431. I'm going to adjust it up to that 450. And again, if you're wondering what I was doing, what I'm doing, it was down here, 430. And now I'm just moving it below this low at about 450. Because that would be where, with the context of breaking out right here, that's where I know I was wrong. If it comes all the way down and drops below there, I know that it's no longer looking like it's no longer acting like it wants to go up. You see, all through here, you've had these higher lows. If somebody goes to a lower low, it wouldn't be good. So let's go ahead and adjust that to. And what it also does is we got in at 443, so now my stop is above where I purchased it. And so not only if it does break below that low, not only do I know I probably need to get out because it's acting different now, but I should be able to get out of the profit overall with raising that stop. And so this is one technique that I use to raise stops when, if it has a higher low, I'd like to see it break out first before I move it up to that higher low. That's what we did here. Oh, wait, this is not, I'm not selling, I'm stopping out. What did I do here? I need to cancel that. I need to adjust my stop price. It's like, that looks a little different there. 450. All right. Now, as far as any new trades for today, I would stick with oil. If you're looking for new oil trades to consider, I was looking at this Arch Resources, this coal stock right here. Arch is the ticker symbol, 98 strength rank. And have this little consolidation correction right here. Nice little update right here. It's looking like it's getting ready to break out. It's like it's put in a higher low right there. Gone to a buy signal today, gone from hold to buy today. I also like, if you like to look at the kind of the larger companies that maybe you're a little bit more familiar with, one thing I told you is you can break down the different sectors within these groups. Just click on that little plus sign right there. And so I'm looking at, I went and looked at oil field services. So these would be like, what I'd be looking for here is like Halliburton and Schlumberger. I'm going to click on the buy button because I think they're both under buys. Yeah, here's Halliburton, 96 strength rank. Does have a buy signal, but you see it's right at this breakout area right here. It got up to it. It's kind of moved alongside of it. That's good. That usually means it's going to end up breaking out to the upside. It's kind of that cup with handle type formation that we like to see a lot of times. So despite the fact that it already has a buy signal, I don't think it's too far away from when it turned to that buy signal, especially with the chart pattern that it's forming. Would look to me like it could break out, move higher there. So I like that one. Schlumberger is another one in that group. Now it's a 93 strength rank, but it still looks good. And it already broke out of this range right here. It's kind of consolidating right to here, but looks like it's acting like it wants to go higher as well. And then what I also liked are a couple of the rig stocks. So if you go into oil and energy and go down to the drilling, oil and gas drilling, click on the buys. Now, rig, I really like rig, Transocean, but it's an 83 strength, and I keep that in mind. But this is one that's really been one that can really have the potential to move and move quickly. And I get it, it is under a $10 stock. But you can see, I mean, look at this big run up right here, big consolidation through here. And if you just think that oil is still going to be bullish for a little while, that still has room to run. I know a lot of, I don't analyze the fundamentals, but there have been some people that I've seen recently that have been recommending rig from a fundamental standpoint. And so I like it from a chart standpoint as well. I would have liked it a little bit better before today's move, but a lot of times a move like this can really kick off a trend direction. And then there's another one in the group that I liked. Which was this HP 96 strength rank. And it's kind of already broken out. Had like a little bit of a triangle formation here that's kind of breaking out of. That looks pretty good as well. All right. That's all I have for today. If I wrap things up, again, just keep in mind that maybe, I don't know for sure, but maybe we do move a little sluggish again until Friday. That would make sense if we do. We don't have to, though. If we break out here, that's fine. Excuse me. But it would make sense, being that that's what the market's going to be focusing on, is that CPI report. And so we'll see what happens. We'll know a little bit more on Thursday, with Thursday's update. I can comment a little bit more on how I think Friday might go. All right, thanks, everyone. Have a great week. We'll see you on Thursday for the stock-specific class. Bye now.